but let's get talking to Emami. That's the first management on the show. They reported what was a good set of Q4 numbers in what is a challenging environment with high single-digit revenue growth and underlying volume growth at 7%. The management is expecting a gradual pickup in consumption FY26 onwards. To talk more about the earnings and the demand environment, we have with us Mr. NH Bhansali, who is the CEO of Finance Strategy and Business Development and the CFO of the company, joining in. Mr. Bhansali, thank you very much for taking the time out. So just take us through a more nuanced answer about the 7% volume growth that you clocked in this quarter. Tell us about the trends that you are seeing in terms of demand this time round, and what are you now projecting going into FY26 when, one, it comes to demand, and two, hence volume growth?
Yeah, so at the outset, my apology as I have a bad throat now, but still I would I'll try to answer your queries. So the volume growth had been very good for the fourth quarter, as you have witnessed, of 8%, 7%. And we expect with the good summer winters, we expect the good volume growth to come in the times to come. Though there has been some moderation in the initial months of April and so, but going forward, there is still some time, some few weeks ahead, and we expect volume growth to be a little better.
So 6 to 8% volume growth for the entire year would be a broad range. And since you spoke about your throat not being too well, I may attribute that to maybe unseasonal rains. That brings me to my second question, Mr. Bhansali. What about summer? You saw some
while it has
moderation there. Yes.
Somewhat the offtakes, it has also impacted the health.
Exactly. So, summer accounts for nearly 40-45% of your overall sales. We did see some traction in Navratna and Dermi-Cool in the fourth quarter. What's the outlook for the first quarter? And if you could give us a broad range for the volumes for the entire year.
Yeah, while Talc has been, because the last year, the first quarter had been good for them. And we expect to deliver a good volume growth on the top of it. Oils has been relatively much better compared to that. And so broadly, as I said, looking at the kind of trajectory we feel, and we are a little optimistic in terms of the remaining 6 weeks. And so we expect a good growth there.
Okay. Your Kesh King brand was a bit weak this time round. I think there was just about a marginal decline, or it was just about flattish in terms of a performance. You're also planning to relaunch this particular brand. So take us through what went wrong with Kesh King and what is the plan in terms of relaunch, and what are you then projecting?
So it's not with the brand. In fact, the category has not been favored a lot by the consumers. And we have recently, in fact, since last few months, for more than 6 months or so, we have inducted BCG to advise us on the hair care and cash care, hair care and skin care portfolio, which includes the Kesh King as well. In fact, the decline had been higher, but this quarter, the decline had been arrested, and we have many strategic initiatives we have undertaken. And we expect this to come to the growth path because there are so many things we are doing strategically on this. There is a 360-degree strategic move which we are doing in terms of marketing to positioning to the distribution and everything. And so we expect the second half of this quarter would be very important, and we expect a sea change there.
What do you mean when you say sea change? What's your target here? What are you targeting in terms of quantitative growth and absolute revenue from Kesh King over the next, say, couple of years?
Yes, we are expecting a good growth rate. The growth is a problem statement which we need to address, and so it would include the growth from the same category and also from the adjacencies and from everywhere, and in terms of the channels, channel optimization, everything.
So what kind of adjacencies are you looking at? And the other category where you have shown remarkable improvement is the male grooming category, where Fair and Handsome has now been revived into Smart and Handsome, new products, and that's shown in growth. 7% growth is what we've seen in the fourth quarter. How much more are we likely to see from here on as this gathers more steam? Are we looking at early teens in terms of male grooming range this year?
Yeah, we are hopeful of that because we have completely, and so our as you might have witnessed, so we have now from the fairness creams we have moved on to the male grooming completely, and with this repositioning and relaunch we expect at least a double digit growth in the times to come. And the early green shoots has been very good. It has been accepted very well in the market, and so that is it. So because this category also under pressure since few quarters, and our that initiative of repositioning has played well, and we are optimistic about that.
Okay. So net, what does this do for the entire fiscal, Mr. Bhansali? 6.5% growth is what you clocked in for FY25 with a 10% or 11% profit growth and margins of around 27%. Tell us, what is FY26 going to look like on all these three parameters? Revenue growth, EBITDA or margins, and profitability.
To give a very summarized reply, no, it would be a better growth. If not similar, it would be better.
So when you say similar, if not similar, better would be...
Looking at the peers and the kind of environment which we are passing through. And so because there are so many uncertainties in terms of the seasonality as well.
So are you assuming it's going to be a sub 10% growth but better than 6.5%, or is it going to maybe be a plus 10% growth?
Internally we expect a double digit growth, but depending on the seasons as it may fall, and the kind of environment, it could be a little lesser, but we are expecting a double digit growth.
And what kind of profitability expansion are you expecting? A margin expansion of, because you are relaunching, so obviously that would mean higher ad spends, etc. as well, right? 100 basis points improvement in the margins, or margins will be stable?
We expect margins to be stable. In fact, our A&P ratios has been in the range of 17 to 18%, which is highest in the industry. And so we will continue to invest behind the brands very aggressively as we have done in the past. And despite this, we have the highest EBITDA margins.
And this double-digit revenue growth that you're targeting, how much of that are you targeting via volumes and how much of that via price realizations or premiumization?
Generally, price growth has been around 3% or so. So rest would 3 to 4% maybe max.
So high single-digit volume growth and low double-digit revenue growth is what one can look at. Any other acquisitions that you're looking at? Because we've seen some moderation in the Man Company and Brillare last year. You are targeting high double-digit growth this year after all the changes that you've made. Any other D2C platforms which are on the block for you to look at? Any particular categories that you're eyeing?
So we are always on the lookout for inorganic acquisitions, be it full-fledged acquisitions or investments behind the startups. So inorganic growth has always been is one of the important pillars of growth for us. We keep on looking at it.
Okay.
So we keep on evaluating them.
Okay. What is the size of the acquisitions that you might be looking at, and which segments specifically?
So we would continue to remain in the personal care and healthcare segment. So that would remain. We will remain in the place where we are already. And as if you look at our financials, we have a cash on balance sheet of around 750 crore, despite paying dividends of 10 rupees, 1,000% dividend. And so we have a lot of huge cash on the balance sheets, and despite very high dividends, capex, and investments behind the strategic investments. So all taken together, there is no constraint if there is a right opportunity, and we would always look out for a good inorganic opportunities as well.
When you say personal care and healthcare, in healthcare specifically, can I ask you if you guys are looking at nutraceuticals, preventive healthcare, wellness, in terms of any sort of food items also? Is that on your cards? Are you looking at healthy snacking, healthy foods?
So we would be there in the health, means which has a health potential, which is really good for the health. So not really kind of a snacking kind of, but if it has some good health value, health proposition, then we may look at it. So in fact, last year we had invested in a strategic investment made in aloe fruit. It is a
Yes.
juice-based product, a juice company with aloe as an ingredient and based on the health. And we also invested a smaller some stake in taken some stake in True Native earlier, which was a nutraceutical, and this company vitamins.
Yes, we do know about True Native. We were just wondering whether you were looking to increase some stake out there and increase your offerings in the protein and other nutraceutical segments out there
We
as
keep
well.
on evaluating the right opportunities and we nurture them.
Thank you, Mr. Bhansali. Thank you for giving us an outlook. Maybe FY26 is a lot better than FY25, but more importantly, the next time we speak, your throat and health is a lot better than what it is right now as well. Take a short break. On the other side, the management of E-Clerks joins in to discuss their fourth quarter numbers, even as the numbers of Dodla Dairy flash at the bottom of your screen.